we're coming up to a life-changing event in the financial system. So if you're, the people I focus on helping the most are usually 50 plus, they're retired or have a lot of money, then they don't want to give up their lifestyle. They don't want to give back 20 years worth of hard work. You need a game plan. You need to be able to know when the markets are topping and protect your capital. Even just knowing when to move to cash is one of the most valuable things you could do at this stage of life, right? And that's what I focus on. I think people need to have a game plan to know when and how to protect their capital, because when a reset happens, it's going to be quick and it'll be life-changing for the better or the worse. It really comes down to how you go about attacking, being prepared for it.
Hey everyone, and welcome to another episode of the WTFinance podcast. On this episode, I have the pleasure of welcoming back Chris Vermeulen. So Chris is the founder and chief market strategist at the Technical Traders. So Chris, thanks so much for coming back on the podcast.
Always a pleasure, Anthony. Thanks for having me.
Yeah, really looking forward to the conversation. I think something that, obviously you're very much focused on momentum and I guess cycles and what's happening in the market. So I'll be really interested in hearing your current outlook on what we're seeing.
Mm-hmm. Yeah, I mean, there's a lot going on. There's a lot of fear in the market, fear of, depending on which space you're in, right? People have fear of the stock market rolling over and crashing. When you go to the precious metal space, there's a lot of fear of people missing out on a huge move higher in gold, silver, and the whole precious metal complex. So there's a lot to unpack. I mean, depending how you want to go about this, like I like to look at the stock market, the S&P 500 as a whole, because that to me is, if money's flowing into the stock market, it gives us a pretty clear direction and asset class to follow. If money's moving away from equities, then usually it's flowing somewhere else. It's always looking for a return. Could be bonds, could be a currency. In this case, it's definitely looking in money's going into the precious metal space. So, when we look at the overall stock market, it's making all-time highs. It's close to potentially making highs again here shortly, but it's really so Magnificent Seven driven. It's not the healthiest of markets. Everything's pretty frothy. Valuations are really high. I think most people probably agree with that, but you don't want to fight this trend. So, there's some mixed signals. Precious metals telling us something big and bad is brewing, but you don't want to be picking a top in the equities market just because, gold's warning of some catastrophe just around the corner.
Yeah, really interesting. But I guess if we look at the Magnificent Seven, it's pretty crazy, but they're sort of the major driver of earnings growth in the US and I guess almost globally as well. So it's actually the fact that they are where, most of the growth is coming from in the economy as well as the stock market.
Mm-hmm. Yeah, I mean, the Magnificent Seven, they still have good earnings. And it's like every day you hear about a new massive investment in processors and things for the AI space, and it reboosts and re-energizes. I think it's a pretty frothy space. When you look at the amount of investments going into any business related around the AI space, it's made everything else dwarf all the previous bubbles, from Bitcoin to fintech, which was huge. All of that, everybody just wants to get into the AI race. So to me, it's a sign that it's getting pretty frothy. And I think we're going to see this momentum eventually stall out. And when it does, it's going to be ugly because everyone's piled into the same stocks. And what happens when that emotional group of everybody chasing returns? What happens when the momentum turns around and it starts going down? Those same traders usually start to sell out in a panic. And of course, when everybody hits the sell button on the same group of stocks, they drop very quickly. The markets or price drops faster, about 4 to 7 times faster than it goes up. So the herd mentality, once the momentum changes, it's going to pull the Magnificent Seven down dramatically, which means the stock market is just going to go into a free fall mode also. So it's going to be exciting times. This is going to be there's a turning point here where people are going to have a life-changing event where they either avoid a catastrophe, which is fine, or they actually profit from the collapse in the markets, or they potentially, eventually lose their shirts. We're going to see a big reevaluation event at some point when this bull market comes to an end for equities.
So do you see this on the horizon? I know you say it's very frothy at the moment, but I guess the challenge is, I feel like people probably thought this for a while and it's kept going up.
For sure. I thought the markets were going to top out a long time ago. I kind of always have this perma bear kind of mentality, always looking to be protected and have a game plan for if and when something rolls over. And the reality is the stock market always is going to have a financial reset. So it's not a matter of if there's going to be one. There will be one. We just don't know when, and we don't know what's going to be the trigger to cause it. So I always have this defensive driver kind of mentality. You're always checking your mirrors, looking around, making sure, there's danger all around you driving a car. Well, same with the investment space. There's dangers everywhere. Something could blow up in the financial system, the economy, anywhere. And of course, everything can collapse and fall in value very quickly. So I'm always looking like, oh, this is giving us a warning sign. This could happen. If this happens, we're going to have a huge reset, a huge collapse. So I'm always kind of trying to get people prepared to be mentally, have a strategy in place, because most people won't do anything until things have already sold off and started to collapse. And then, of course, they all have the same mentality, which is like, well, I'm down so much already, and I might as well just ride it out, which could take years, and their price could still fall dramatically from where they are. So I always have this perma-bear kind of mentality saying, hey, always be prepared. But again, you got to ride the trend higher. So we've been long the equities markets. We keep riding it to all-time highs. But I'm aware that eventually the music is going to come to an end. And one of these pullbacks in the market is going to turn into the major market top and a multi-year correction that wipes out most retirees' life savings and their lifestyle and all of that. And that's what I try to protect people from.
Yeah. And what are you watching for to sort of be prepared for that for when that happens?
To me, one of the biggest barometers is really the precious metal space. When you look at gold, well, there's a few things. First off, the stock market is going higher with just a basket of stocks, a handful of technology stocks doing most of the heavy lifting for the S&P 500 and the NASDAQ. But when you go and you look at precious metals, gold is through the roof. We could, there's a really interesting comparison chart. If we share my screen here, I can show you there's two charts that I can share. The left chart is the candlestick chart, is the S&P 500 back in 2007, just as the stock market put in a major top. The yellow line is the price of gold. Now, both of these were rallying together. And when you see gold dramatically moving higher with the stock market, it's a big red flag. Something's wrong. People aren't trusting the financial system. They don't trust the governments. They don't trust currencies. They're worried about all kinds of things. So when gold starts to just take the lead and run higher, we need to be aware that there's something unfolding that we're not going to like, and it's going to be hard on the economy, probably the stock market. Now, if we take a look at the chart on the right-hand side, we have the same. We've had gold rally for this, last year and a half. We've had the stock market rally hitting all-time highs. The really interesting comparison when we look at these two, now, the market environment is different, like the economic environment, and it always is for every major market top. But this is what I want to share and kind of show where we're at. So I've just added a whole bunch of charts down below. We've got gold miners, we have silver, we have platinum, and we have palladium. And what happens here is we've just, back over here, we started to see a bunch of money pile into gold miners. We saw a bunch of money pile into silver, into platinum, into palladium, and then they all went and had a little bit of a pullback. Now, these are all weekly charts. And this is as the stock market was just putting in a major market top. Gold was testing all-time highs. And what's interesting is if we were to drag forward, let's just look at the stock market and gold here. Stock market fell about 20%. And gold continued to rally. Gold had this very, very big move. I'll just backtrack a bit here. Stock market put in a top. Precious metals went higher. And if you take a look, you'll notice gold miners down below rallied. Silver rallied like over 50%. Platinum and palladium both rallied over 50%. And then once the stock market momentum really stalled out and the tide actually changed, we saw the stock market collapse and it fell over 50% and it pulled the commodity space down, which generally in a recession, almost everything goes down. And so the same thing happened. All the other commodities sold off 50, 60, 70, 80% during that reset. So if we just backtrack here, Anthony, and look at kind of gold hitting highs, the stock market showing a little bit of weakness, and we look at to where we are today, look at where we are today. We've got gold miners have had the big move, silver. We've seen platinum, we've seen palladium. They've all just recently had the little bit of a pause or pullback, and they're starting to push higher. And of course, we're getting kind of right into this phase where we could start to see a very big move up in the precious metal space. And this is usually going to be the signal that the stock market is on the cusp of a major market top and selling off. So this is my biggest barometer. When you see the whole world moving away from the financial system and buying physical gold and silver, that is a sign that big money is trying to protect themselves because they see or sense something bad unfolding in the economy. And like the whole world, really, gold is the global barometer. So this isn't just like United States or Canada based. This is gold tells us like something is wrong across the board and people are trying to protect their capital.
Yeah, it's really interesting how you see the similarities between, I guess, the 2008 recession and where we are today. So yeah, it seems like, so you're saying where we are at the moment could potentially be that pullback, and then there might be another sort of, bull trap, and then we go down further. That's the potential risk that we're currently seeing at the moment if we sort of relate the trends with gold and the other precious metals.
Yeah, I think we're going to see precious metals continue to move higher. I think the stock market, it may push a little bit higher, but I think it's running out of steam. If the Magnificent Seven weren't so powerful in terms of how much they control of the indices, this market I think would be struggling in a pretty big way. In fact, if we look at the small cap stocks like IWM and we just kind of look into the more recent price action. This pullback that we had, it was fairly significant. It broke down through the 50-day. It's kind of bounced up and it's stalling through a lot of price action here. Another one to look at is the microcap stock market. It broke down even more. It's had an even weaker bounce. So money is really changing its momentum. It was pushing into growth stocks a few weeks ago. Now it's really not recovering like it should. We generally want to see small caps and micro caps leading the market higher. And they have kind of broken down into a downtrend. They're now into resistance and showing signs of weakness, yet the Magnificent Seven are still, and the S&P 500 are still looking kind of bullish. So this is an early warning sign. You still need to be long equities here. This is still just a pullback, and we just need to see if this is, the start of a new downtrend or if we're going to go higher. And you have to have a game plan to identify when to jump ship and get out of equities if it does roll over the next week or two.
Yeah, interesting. Have you done an analysis in like previous government shutdowns? Because I know some people I've talked about, how that can obviously remove liquidity from the system and it can have a big impact on markets as well. So I'm not sure if that could be sort of one of the major drivers for the recent drop we've seen.
Yeah, I don't take too much into account. I feel like we have the government shutdown every year and the markets still kind of do what they're going to do. In fact, if we look at seasonality wise on the charts, we can look at seasonality of gold. So gold's recently pulled back, which is typical in October, November. We usually see gold top out and pull back. And then in the middle of November, which is where we're at right now, gold usually finds a bid and it starts to rally into the end of the year. So that's kind of what we're seeing. If we were to just look over at the gold chart real quick, we can see that. Just get rid of this chart. If we take a look at gold, you can see it topped out in October. It's pulled back, and here we are in November, and it's going to want to naturally move higher up into the end of the year. And it's very similar kind of for the stock market. If we look at the SPY, the SP 500 usually finds a low in October. We had a pretty significant low in October, and it's starting to bounce and move higher. We'll look at the seasonality wise. Usually the stock market gets really volatile in the second half of October, puts in a low. It rallies up, and eventually we go into that end of year kind of holiday rally. And so we're in this phase right now where the stock market's just trying to get some traction, maybe for a few more days before it really has a tailwind where it could push up really strong into December and the rest of the year. So again, I don't really take the whole government shutdown. I don't see it affecting the markets. It's never, I don't find a relationship there. I just really follow price and follow the money flow. And as long as you do that, then you're usually on the right side of the market, because the only way we make money as investors is if we trade with the trend and the trend's going in favor. So you identify the trend and then you jump on and follow that trend, because a trend is more likely to continue than it is to actually reverse. And so many people are always trying to pick tops, and it's a terrible scenario, because the market usually wants to just keep going higher if it's trending up, and the market naturally wants to go higher. Majority of the time it is. So anybody picking tops really has the odds against them. Unfortunately, a lot of people do it because the economic data always sounds bad. It always feels like the markets are ready to pull back, so people pick tops. But it's a net losing strategy, because like 80% of the time or 95% of the time, the market is going higher and making higher highs. So it's a pretty poor bet for those picking tops.
Yeah, you always want to try and be exposed to the markets because, as you said, historically they're going up. So that's the main thing there. So then, how do you see? I know a major thing that people have been focusing on are bonds, government bonds. There was a lot of concern about sort of their yields rising and I guess the value of them going down recently, but it seems to have reversed. And I haven't actually looked at it recently, but yeah.
Yeah, I mean, when we look at the bond market, like TLT, which is the long-term treasury bond, it's obviously been in a bear market for a long time since the COVID crash. It's still trying to carve out a bottom. It is in an uptrend, a short-term uptrend overall. It's got a series of higher lows, a series of higher highs. So it's doing okay, but when you look and zoom out of the big picture, it still has a lot of work to be done. I still think it needs to get up to, for example, this ETF somewhere up into this $100 mark, and it'll probably consolidate. And when it breaks through that, I believe that'll be when, we're going to see bonds really come into life here and become an opportunity. Is if bonds get up there, I think the economy will be probably difficult and struggling. It's really difficult, obviously, with what's going on with interest rates and the Fed and the president, all that stuff. What's going to happen with interest rates? Inflation is definitely pretty sticky. If inflation stays up, the rates might not want to really drop. So there's a lot of wild cards. Bonds are definitely not as simple as they used to be. It's not a 40-year falling interest rate environment anymore. Now it's a kind of a mixed interest rate environment. And there's a couple of people trying to push and pull on the rates. And of course, economic data now isn't as true as it used to be. It's the formulas they have for a lot of the economic data comes out, they keep changing them. So for all we know, the data is terrible, but they adjust the formulas to make things look better, right? So we're kind of moving in things a little blind. And that's why one of the nice things about what I do is I don't really care and take any economic data or the Fed or any of that stuff into account. I just simply follow price, follow the money. And if you can follow price action and identify trends that are strong, that are worth getting on board, it doesn't matter what's going on in the rest of the world. You're either long something or you're short or you're sitting in cash waiting for a new opportunity.
Yeah, and all those sort of actions or decisions that you're making to be allocated to something, long, short, nothing, basically.
Yeah.
Yep. No, interesting. And do you see this being similar size of bubble to what we saw in, I guess, the tech bubble in 2000? Are you is that where you see similarities? I know you compared it to the recession from a gold perspective, but yeah, have you analyzed that?
Yeah, I mean, we're definitely kind of in somewhat of a tech bubble here. Is it like 2000? I don't think so. The tech companies now know how to make money. They can, they make a lot of money. Some of them, the AI space, maybe not. The AI space has a lot of money moving into it. People are dumping investment money in, but they're actually not really making money in a majority of cases. So there is that kind of bubble. I think this time around, the markets move very quickly. I think when things do turn around, there's going to be a lot of selling. I think it'll probably be fairly swift. I think it's a lot like the herd mentality. They all move into the same stocks. Like it's kind of like the big meme stocks that they just shoot straight up, right? I feel like that's kind of the mentality of the stock market in the AI spaces. Everybody's just been moving in at a much slower speed, but lots of people. And when this bubble deflates, it's going to pull things down in a pretty sharp way. I think 2000 was like a 3-year bear market. It took time to unwind. I think it'll be more like a 2008 financial crisis where most of the damage is done over a couple of months. It's severe, it's sharp, it's going to rattle investors and the financial system. So I do feel it's going to be fairly swift and abrupt. And so you want to be prepared for it.
How are you prepared? So say once this happens, how are you allocating? Do you sort of fully exit the market? Are you looking for, as you said, gold could potentially outperform after that? Are you looking for bonds? How are you looking to play it? Or it just depends?
Yeah, I think right now, we're still long equities right now. Eventually, at some point, we will move to cash as the market starts to top out and doesn't give us a clear signal. And then eventually, once we get into a bear market where it's clearly in a downtrend, we're going through a big financial reset, we actually trade inverse ETFs. So as the stock market drops, these ETFs go up in value. It allows us to benefit. So that's kind of the best way to take advantage of it, because when we get into a recession, almost everything collapses in price. So you do need a strategy that just benefits from things falling. There's a lot of fear. There's a lot of strong downtrends, and you don't want to fight any of those. So you might as well just jump on board and profit from, more so the drop in pricing. So that's how we usually go about it. Well, there'll be a lot of times we'll be in cash during all this. Sometimes one of the best positions to be in is cash, because just because things are falling doesn't mean there's a good opportunity to take advantage of it. Falling market means volatility is really high, which means there's huge intraday swings and back and forth from week to week. That carries a lot of risks. So you definitely need to pick your entries, profit from collapsing, price breaking down, but then quickly move to cash and wait for another clean opportunity. A lot of people think they just always need to, trading a falling market is very difficult. The bounces and the rallies in a bear market are pretty much the strongest ones you see in the market. So if you are trying to short something or buy an inverse ETF, if your timing is a little off in terms of identifying what to do, you can have these rip your face off rallies that will wipe you out very quickly. So it takes finesse. Yes, it takes patience, which most people don't have. They naturally just want to be in trades. They always want to find something new, but you actually have to sit back, let the market unfold. Let the opportunity come to you. And then once you see the chart patterns and the momentum change, then you can, as things start to break down, then you can jump on an inverse ETF and let it free fall and quickly hit your targets, move back to cash, wait a month or two for the next setup or however long it takes. So cash is going to be one of the most important things. Most people don't like cash, but I'll tell you, when you go through financial reset, there is nothing better than watching everyone else lose their shirts but you. And you're still earning daily interest and people are, losing everything. Cash is one of those positions. If you ride out a bear market or you go through a bear market, you'll be like, man, if I just went to cash near the market highs, I'd be laughing. I could reinvest it all now down at this new bear market, this low. So cash is a great position, but most people don't realize the value of it until it's way too late.
Yeah. And is there anything that you really like at the moment?
I like precious metals. I like gold, silver. I like the precious metal space. It kind of is the most exciting space right now. I have a lot of physical metals. So I like that. That's the most exciting thing. We're long equities. We're still trying to ride this trend higher until proven wrong. But other than that, those are the two things. I do like the dollar index as well. I think in the next couple of months, the dollar index could become a very good play. So for international traders, I'm in Canada. To own US dollars, I think is going to be a very good play. I think there's about 10, 15% upside potentially if we do have a global reset for the US dollar index to really rally. And it's a currency just to hold, I think, going forward.
Okay, interesting. Yeah, because I guess a lot of people thought that it was probably going to continue to weaken with the Trump actions and the government deficits and the issues there. But you see it. Do you think it's sort of maybe bottomed and it could sort of?
Yeah, if you look at it on the weekly chart, I mean, it looks like it's definitely bottomed. I got the chart right here. We can look at it on the daily chart actually, and just can just look at it here. You can see it looks like it's putting in a big rounding formation. And as you just mentioned, Anthony, like what I believe the dollar is going to do, no one else believes or thinks is going to happen. Everybody has the bias that you just said, which is they're all thinking the dollar is going to fall apart, it's going to weaken. And of course, when it's that strong of a mentality, the market usually catches the masses off guard. And I think we're going to see a huge rally in the US dollar index. I think it could go to $1.10, $1.15, 16. There's some targets and patterns that show going up to about $1.21, 121 to the upside. So, the market does what you're least expecting. People are thinking interest rates are going to fall. We don't know. Maybe they're going to stay or rise. People think the dollar is going to collapse. And of course, I think it's going to go the other way. The charts are showing it's putting in a bottom. And whenever we go through a financial reset or a global reset, we tend to see the US dollar rocket higher in value. And that's what I kind of see unfolding at some point down the road here.
Okay, really interesting. I guess the other big asset that we haven't really talked about yet is Bitcoin. So I'm not sure if you have any perspectives on that.
Yeah, Bitcoin is a pretty gnarly looking chart. I'm not a big fan of it. We can look I'll just zoom in a little bit here. Overall, I kind of feel like Bitcoin, where it is right here, right now on the daily chart, is kind of like over here. I think it's very unpredictable. It's got, looks like it wants to, it's in a downtrend. It looks like it wants to continue to go down. But if we look at the price action too, if we were to just kind of draw some lines across these levels, it has this broadening formation, which means it's a megaphone pattern, which means it makes these false highs. It fakes you out. You think it's going, going to rally, and then it sells off, and then it breaks a low, and you think it's going to collapse, and then it goes and rallies, and it breaks a new higher high, and then it gets you all bullish, and then it reverses and it makes a lower low. So the volatility is expanding as we move through this. It's carrying more and more risk. The trend is down. Usually megaphone patterns are a sign of instability. It's just big bouts of buying, big bouts of selling. It's usually a weak sign in the long run, meaning it should break down eventually and sell off. It's not a very good sign. So I don't like Bitcoin here at this point. I would steer clear of it. I think we could see a very big unwinding event, at some point where, it ends up coming back down somewhere into the $60,000 range, $70,000 range. If the markets do roll over, potentially even lower, maybe down to pierce the 50,000 mark. So I'm not very bullish on it. And of course, if the stock market crashes, we're probably going to see Bitcoin crash as well. It moves somewhat similar to the NASDAQ.
Yeah, okay. Yeah, great point. So, Chris, thanks so much for your time today. We sort of covered every asset, all markets, the economy, what's going to happen in the world. But my last question is, what is one message you want people to take away from our conversation?
I think the biggest message is to just realize, I think we're coming up to a life-changing event in the financial system. So if you're, the people I focus on helping the most are usually 50 plus, they're retired or have a lot of money, then they don't want to give up their lifestyle. They don't want to give back 20 years worth of hard work. You need a game plan. You need to be able to know when the markets are topping and protect your capital. Even just knowing when to move to cash is one of the most valuable things you could do at this stage of life, right? And that's what I focus on. I think people need to have a game plan to know when and how to protect their capital, because when a reset happens, it's going to be quick, and it'll be life-changing for the better or the worse. It really comes down to how you go about attacking, being prepared for it.
Yeah, great message. So, Chris, thanks again. If anyone wanted to find out more about your work and what you do, where would the best place for that be?
Yeah, the best place, you go to YouTube. The Technical Traders is my channel, or you can go to my website, which is thetechnicaltraders.com. And I share my charts. I do a morning analysis every day before the opening bell, so you can stay up to speed if you want. I share my portfolio, every trade I do, my allocations, my targets. Really, I ride the coattails of the markets, and my subscribers just copy the trades that I do in my portfolio, and we all just navigate these markets together.
Great. I'll put it in the description below, but thanks again for your time.
Thanks. Take care, Anthony.
Hey, everyone. Thank you for listening. I really appreciate the support. If you've got value out of this, I'd really appreciate it if you could like, subscribe, or comment, good or bad feedback. I'm always open to that, but it really helps with the channel. As I said before, only about 14% of people actually subscribe to this channel. So if you were to that, it would really help. It could mean we could continue to grow. If not, thanks for watching, and see you on the next show. And you also might like this video right here. All right. Thanks again.